Welcome back to Rendite Radar, the podcast where we decode the hidden forces of our economy. I'm Lena.
And I'm Jonas. Today, we are diving into something that sounds like it belongs in a science fiction movie, but is actually trading right now on the stock market. We're talking about ASP Isotopes, Inc., ticker symbol ASPI.
Exactly. It's a specialized materials company focused on the production and enrichment of isotopes. And Jonas, when we say specialized, we mean it. Their technology targets nuclear medicine, green energy, and even quantum computing.
Okay, isotopes. That sounds incredibly niche. Usually when I hear niche science stock, I hear cash incinerator. Is there an actual business here or just a lab experiment?
That is the key question. Let's look at the numbers. In the third quarter of 2025, their revenue jumped to approximately $4.89 million. That is a significant increase compared to just $1.09 million in the same quarter of the previous year.
Hold on, a 5x jump? That's impressive. But you know me, I have to ask, where did that money come from? Did they suddenly sell a mountain of isotopes?
Not exactly, and this is where you need to be careful. About 70% of their 9-month revenue for 2025 came from one-time construction projects via their Skyline acquisition in Hong Kong. It's engineering services, not their core product.
I see. So the headline number is pumped up by a construction gig? What about the actual recurring business, the stuff they're supposed to be selling?
That is growing, but it is smaller. The recurring product revenue, primarily from medical isotopes, was about $3.57 million for the first 9 months of 2025. They acquired a majority stake in PET Labs in South Africa back in 2023, which produces radiopharmaceuticals. So we are seeing real sales, but we're definitely still in the ramp-up phase.
Okay, so they have a foot in the door, but what makes them special? Why shouldn't I just buy a big established chemical company? What is their moat?
It's their proprietary technology called the aerodynamic separation process, or ASP. It's been in R&D for about 20 years. The claim is that it allows for much more efficient isotope separation compared to conventional methods like gas centrifuges.
20 years of R&D, that is a long time to be tinkering.
It is, but the expertise is deep. Their CTO, Dr. Hendrik Strijdom, co-developed this technology and has over 30 years of experience in isotope separation. Plus, the barriers to entry here are massive. You can't just wake up and decide to enrich uranium or medical isotopes. The regulatory hurdles and non-proliferation treaties scare off almost all potential competition.
That makes sense. Regulation is a pain for operators, but a great moat for investors. Now, who's steering this ship? Is it just scientists, or do they have money guys?
It is a very interesting mix. The CEO, Paul Mann, is actually a former Wall Street guy. He spent 20 years at places like Soros Fund Management and Morgan Stanley.
A hedge fund guy running a nuclear science company? That's unusual.
It is, but he's also a chemical engineer by training, and her CFO, Heather Kiesling, has 30 years of finance experience in life sciences. It seems they have built a team that understands both the complex physics and the complex capital markets.
Which they definitely need because I assume this company burns cash like a furnace. Let's talk about the ugly part of the report, the financials.
You are right to be skeptical there. The bottom line looks dramatic. For the first 9 months of 2025, they reported a net loss of roughly $96.5 million.
Ouch, nearly $100 million in losses on less than $10 million in revenue? That sounds catastrophic.
It looks that way, but we have to peel back the layers. About $64.5 million of that loss was a fair value adjustment on their convertible debt. It's an accounting loss, not cash leaving the bank account. The actual operating loss from the core business in Q3 was closer to $13.9 million.
Okay, so the accounting makes it look worse than it is, but $13 million in operating loss is still real money. How long can they keep the lights on?
They're actually sitting on a lot of cash right now. Thanks to capital raises in 2025, they had about $114 million in cash and equivalents at the end of Q3.
So they have a runway, but at their current burn rate, which was almost $20 million in operating cash flow drain for the first 9 months, that cash won't last forever.
Correct. And they're investing heavily. They spent $7.3 million on new facilities and loaned $30 million to their subsidiary Quantum Leap Energy. They're effectively debt-free in net terms because their cash exceeds their debt obligations, but the burn rate is the metric to watch.
Let's talk about the why. Why are people buying this story? What is the dream scenario here?
There are three main growth drivers. First, medical isotopes. There's a global shortage of isotopes like molybdenum-100 and ytterbium-176 for cancer therapies. ASPI is positioning itself to fill that gap.
Okay, curing cancer is a good business. What's number two?
Number two is the big one, HALEU. That stands for high-assay, low-enriched uranium.
That's a mouthful.
It is, but it's critical. The next generation of nuclear reactors, the small modular reactors, or SMRs, need the specific fuel. Right now, Russia dominates the supply, and the West is desperate for an alternative. ASPI plans to use its tech to produce HALEU efficiently. They raised $72 million specifically to build a plant for this, targeting a 2027 start.
That is the geopolitical angle, betting against Russia's dominance in energy. I like the narrative, but 2027 is still a ways off. What's the third driver?
Helium. They recently acquired Renergen, which gives them access to the Virginia gas project in South Africa. Helium is in massive shortage for semiconductor manufacturing and MRIs. Prices have skyrocketed recently.
So they're becoming a commodity player too? That feels a bit scattered. Isotopes, uranium, helium?
They call it a vertical integration strategy. They want to be a one-stop shop for critical materials. The helium provides cash flow to fund the long-term isotope projects.
All right, let's play devil's advocate. What can go wrong? Because when I hear nuclear, South Africa, and pre-revenue, my risk radar goes crazy.
The risks are substantial. First, regulatory risk. They need permits for everything, especially the uranium work. One no from a regulator in the US or South Africa, and the HALEU project is dead in the water.
And technology risk.
Definitely. They have produced small amounts of lighter isotopes like carbon-14, but scaling that up to industrial levels for uranium is a completely different beast. It's unproven at that scale.
And let's not forget the shareholders. You mentioned they raised a lot of money. That means dilution, right?
Massive dilution. The share count went from about 52 million to over 110 million in just a year. If they need more money for the HALEU plant, and they likely will, investors could get watered down even further.
So it's a classic story stock. No earnings today, just a promise of a bright nuclear-powered future. How is the market valuing the stream?
It's hard to value with traditional metrics since there are no earnings, but the market cap is around $800 to $850 million. That's a price-to-book ratio of roughly 6 to 8.
That is steep for a company that's technically still figuring out how to mass produce its main product.
It is, but analysts are optimistic. There are strong buy ratings with price targets around $12, which is significantly higher than the current price of $6 or $7. They're betting on the macro trends, the nuclear renaissance, the decoupling from Russian supply chains, and the boom in quantum computing.
It's a high-stakes bet. If the tech works and the geopolitical winds keep blowing in their favor, this could be a monster. If the tech stumbles or the cash runs out, well, we've seen how that movie ends.
Exactly. It's a high-risk, high-reward play on the future of critical materials.
Fascinating stuff. A company to watch, but maybe not one to bet the farm on unless you have a stomach of steel.
Couldn't have said it better myself.
Be sure to follow us on Spotify and YouTube at Rendite Radar Official so you don't miss a single episode.
This podcast does not constitute investment advice. All content is for informational purposes only.